Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about C&D INTL Group interim report. C&D International Investment Group Limited offers a diverse range of businesses and services, including property development, real estate industry, chain investment, services industry investment activities, entrusted construction management, services property management, services construction engineering management services. The significant increase in C&D International Investment Group's stock price over the past year can be attributed to several factors. Firstly, Morgan Stanley's positive outlook for the Chinese real estate sector, anticipating recovery in development profit margins and rental growth, has contributed to the company's stock performance. Additionally, CICC's outperform rating and raised target price for Giantfa International Group, C&D International Investment Group, have also boosted investor confidence. Furthermore, discussions around robust financials driving rallies in the company's stock have been a significant factor. The inflection point for profit margin improvement in the real estate sector, as suggested by Guolian Minsheng Securities, may have also contributed to the increase in the company's stock price. However, it is worth noting that none of these news items or market analyses indicate a stock price increase exceeding 69.95% for C&D International Investment Group in the past year. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the positive side, property development revenue increased due to higher unit selling prices in certain cities, resulting in a 3.7% growth. Additionally, contracted sales attributable to shareholders rose by approximately 4.9%, while revenue from property management and other related services saw a significant increase of 16%. However, on the negative side, saleable GFA delivered for property development decreased by 1.15 million SQM, leading to a decline in revenue. Furthermore, contracted sales GFA attributable to shareholders dropped by approximately 18.4% in certain cities. These factors highlight the importance of market conditions and pricing strategies in driving revenue growth or decline. The company is indeed generating positive operating cash flow. This is evident from the net cash from operating activities of RMB 12,031,348 in 2025, as stated on page 13. Furthermore, despite the initial indication that under positive operating cash flow, a closer examination reveals an increase in depreciation and a decrease in provision for expected credit loss allowance on loans to associates and joint ventures, which supports this conclusion. The company's debt level has undergone significant changes. According to the financial summary, the debt level decreased by a substantial amount of RMB 22,706,962,000 between 2018 and 2020. This reduction in debt is evident across various categories, including bank loans. In terms of interest expenses, there are mixed trends observed. On one hand, interest charges on bank borrowings decreased by 20.4% from RMB 502,061 to RMB 399,215. However, interest expenses to C&D real estate increased by 6.8%. The breakdown of interest expenses reveals that intermediate holding companies saw a decrease, while associates experienced an increase and joint ventures witnessed a decline. Overall, the company's debt level has decreased significantly, but interest expenses have shown varying trends across different categories. Management is emphasizing a strategic focus for the company's future. Key priorities include investing in core regions with precise investments, maintaining liquidity through inventory clearance and risk management, driving innovation through research and development, to maintain product leadership, implementing high-quality flagship projects, particularly in key cities, achieving expected goals, and securing leadership by 2025. These initiatives aim to position the company for long-term success. The company has a history of paying dividends to its shareholders, with distributions made in both 2023 and 2024. In 2023, the dividend payout was $0.30 per share, while in 2024 it decreased to $0.20 per share. There is no record of any share buyback activities by the company. Concerns about inventory buildup emerge. A review of the financial summary reveals concerns about inventory buildup within the company. The data indicates a decrease in raw materials procured from an intermediate holding company, RMB 103,898 versus RMB 1,918, suggesting that existing inventory levels may be higher than anticipated. Furthermore, the company acknowledges the need to fortify the safety barrier of inventories and has strategies in place to accelerate inventory clearance. Additionally, facilitating sales and inventory clearance implies some level of inventory buildup, which could impact future operations if not addressed promptly. That concludes the financial summary for C&D INTL Group. Feel free to comment below, and I will be happy to answer them when possible.